A lot of the debate right now starts from the same assumption, that with the United States becoming more unpredictable, Australia has no choice but to stick close to China on the trade front. That decoupling would be reckless. That diversification is aspirational and not real. That Australia is still fundamentally dependent on Chinese demand. And to some extent, that is true. But here's what I discovered when I looked into it. The uncoupling has already begun, and most people haven't noticed. Canberra hasn't made a big announcement and no one has declared a strategic shift, but the economics have quietly changed. According to a recent Commonwealth Bank analysis, Australia's dependence on Chinese domestic demand actually peaked back in 2018 at around 7.5% of Australian production. By 2023, that figure had already fallen to about 6.2%, a material drop driven by slower Chinese growth, property weakness, and reduced infrastructure spending. That's before you even factor in what's happening now. China's working age population has begun to shrink. Manufacturing is relocating out of China. And economic coercion has permanently changed how Australia and others think about risk. At the same time, something else has been happening. Australia's trade exposure to the West and other high-trust economies has grown. In fact, the CBA analysis shows that Australia is now more dependent on Western domestic demand, no single economy but the bloc, than on China's. Roughly 10% of Australian production is linked to the West compared to about 6% with China. Southeast Asia, South Asia, North America, Europe. That's where the marginal growth is now coming from. Not because Australia is choosing sides rhetorically, but because firms are responding to risk, tariffs, supply chain fragility, and trust. And that's the key point. This shift isn't really ideological, it's structural. Australia hasn't slammed the door on China, and we won't. China will remain a major trading partner of ours for years, but the idea that Australia's prosperity still hinges solely on Chinese demand, that's already outdated. Even without saying it out loud, Australia is gravitating back toward the West and toward partners where rules are more predictable, disputes are less politicized, and diversification is rewarded, not punished. So when you hear arguments that Australia must cling to China because the US is unreliable, understand this. The economy has already adjusted, quietly, incrementally, and in ways that are very hard to reverse. And once trade patterns shift, they rarely go back. If you're running a business that trades internationally, this is exactly the kind of shift you need to be thinking through carefully, not in headlines, but in systems and exposure. I've pulled a lot of this thinking together in something I call the blueprint for international success. It's not about China specifically. It's actually about how companies structure trade, supply chains, and market entry when the rules aren't as stable as they used to be. It's here on the channel if you want to go deeper.